Good morning, everybody. Thank you for joining. This is Dee Dee with Power 3 Trading. I'm not here just to teach you the strat, but teach you how to execute the strat techniques and profit from this market. If you have any questions regarding the strat, please reach out to my guy, Rob Smith at Smith and Black channel, Robin the Black on Twitter, and at sepiagroup.com. So yesterday we talked about maybe doing nothing in this market because we saw on the 27th here, price trade up, come back down, got close to our broadening formation on the Qs. And we knew we didn't want to get stuck in this range. So price either had to trade above this area for 2-2 continuation or below this area for a 2-2 reversal, because remember, this was a 2 up on the daily. And so my view was, if this, if price would trade higher, maybe we could go, price action go 2 up on the, because it was 2 up on the week, but it traded down. So remember, this is Monday. Else, if price trade takes this area here, there's a potential for it to go outside week by Friday. Yeah, I don't know, guys, but what I can tell you is that we're in full time frame continuity back to the downside. So we talked about this being the last week in the month, last week in the quarter. The market was like, no can do. And so when you see these moves, you want to take advantage of it. And so we're going to talk about it. And let's just look at the SPY. Oh, before we go, we drew this broad information on the monthly, right? So this will be a target here for today. So right around 282. It's at 281, 282.61 now. So we'll see if price breaks here, looking to take out this this 2 up hammer hanging man pattern here, which low is 280.31. So 282, we'll see if that holds. If not, look for more pressure to the downside. The SPY went outside on the daily, guys. Traded up, took this daily. Now you're looking to try to take this gap from Monday or Friday. So the high here is 378.83. We drew our broad information. So right around 378, guys, will be our target for today. If price trades this lower, then you can see an opportunity to take the low here at 372.89. So our target will be about 378, 377 some change on the SPY. So we charted yesterday. We charted snow. It was a gapper. And so let's take a look at it real quick, because again, we're looking at our, always monitoring the broader market, guys. I'm always looking at that. I want to see what the Qs are doing, especially because I trade a lot of tech companies. So I'm primarily looking at the Qs. And we see this gapper here, right? But then you also are looking to see where our broad information is. And so what we were looking for is if we're gonna go long above 153. So that was this range, right? So we said if price trades above this range, we look to go long. If a reversal short, if a reversal, we're gonna short this. And when CCI crosses below 0, there's continuation to the downside, and I'll show you that. And that's on the 18-minute time frame. And so, and it actually crossed on the 90 as well. You can see prices starting to trend lower here on the day. But we're going to show you what this looked like on 18. But here was our broad information, right? So we knew if price came back into this range, the upward momentum was done, right? That's why we draw these broad informations. They help us to gauge our direction. Here, we're going to go long. Here, that long position is done. Now we're looking for shorts. And so we said we would go short below 147 because we wanted price to trade below this range. So this was our close for the day, not the low of the day. This was our close for the day. So we drew this broadening formation from this close to this 2-up bar. And so the idea here is if price traded below this range, we were going to go short. Now, when we draw this up, it's based on movement at the open. So I actually added that caveat there. But for sure, we're looking to short. If you missed all of this and you have an all day puker like we saw yesterday, then yeah, you know you want to go short in this range if you miss your entry up here, but we're going to talk about it, all right? So here's what price did. And you guys know I like to wait for my 18-minute flip. So price open, that's this yellow line here, price open right here. It went inside and then traded back into this range. So now I'm looking at a short position. It crossed back over, so this is my 18-minute flip. I'm looking to short right here at the low of this 2-up candle that closed down. I'm looking to get in short here because this is my flip, 18-minute. This is crossing now below plus 100 on my 18-minute. So I am not waiting for this move to cross here. I'm going to jump in here, and then I'm going to use this upper broadening formation as my stop loss. So I'm entering here right at the low of this range. So I'm not taking it here. I'm not going to take, I'm looking here because this is the flip, but it doesn't trigger until this range here. Now you can see this makes sense because this is where price action trade crossed back below 100 on my 6-minute as well. Now, why did I feel like that was okay? Guys, you have to get, you have to be willing to take a loss. Let's just start there. You have to be willing to take a loss. Now, I already know, right? You're in the 90. You already know you're red on your 90. So if you use a 90, or if you use a 60 or a 30, you know you're red here because of where the open was. It opened and it immediately traded down. So here I am. I'm on the Qs at this 18-minute flip. And this is what I see. The broader market is now starting to trade lower. So I'm thinking, hey guys, if this is going to trade with the broader market, then I like this entry right here, right? So I'm a fan of trading this. And so I'm looking at both of those. And I would encourage you, if you're not flipping around and looking at, or even have multiple, and if you guys have seen, I can't do Rob, right? Rob's got, I don't know, 16 screens or something and multiple charts in each screen. I can't do that. But I do have 2 screens, and then I trade off one computer and my charts are on another. And so I am looking at on my trading platform. I'm using a laptop, so I do use that screen for the broader market. And so I can look at this and say, yeah, broader market is flipping here, guys. I am okay with taking this risk. And so you have to think about that, use good risk management, but also, you can do that by position sizing, right? So don't jump in with a huge position, get into what I would call a profitable situation. And then he says, add, okay? And that's where you can do that once you crossed here. That would have been I didn't do that, but that would have been a great opportunity at the 90 flip. So this was the 90 flip. So think about it now. Here is, now of course, in my situation, I'm using this as target. So I'm taking profit here, okay? So here, price action hits, trades back up right on that 18-minute flip. This is at the 18-minute flip. I am taking profit here, okay? But you could have held this, you know, depending on your situation, especially if you only have a few trades, and be okay. Set your stop loss at break even, and you know you're not going to lose money for the day. But with the market, let's go back to the Qs, with the broader market doing this, and then it crosses my zero line here, feeling pretty good, crosses negative 100, I'm feeling real good, right? This is how I use the momentum trade. So I'm not straight looking at 212s, 222s, 322s, because not every signal is a good entry. I'm looking for momentum. Do I get this signal plus momentum? Yes, bam, I'm in the market. All right. So let's go back to snow. And so this is where I'm taking profit. So as soon as this hits and comes back up, I don't like this. So I'm exiting right about here. And then you have this. So on snow, you have this 2 up, comes 2 back down. You're still inside this 90 range, right? You could take that again. We're in an outside bar here, right? I am officially out of the market at the 90-minute flip because I had some other things that I had to do. But I'm going to show you here on this 90-minute flip. So if you missed all of this, right, at the open, your 90-minute flip, CCI is starting to trend down, guys. CCI is starting to trend down, right? You're breaking. So again, going back to our plan, we want to short below this range. So if you missed all of this and you see what Qs are doing, boom, boom, boom. Yeah, 90-minute flip. This is at 11 o'clock. You had an outside bar. We're looking to take this outside bar down with CCI. Look at it, it's crossing my zero line. That gives me strong confidence the broader market is going to continue to the downside. So you could take this, you got a 2 up, 2 down right here, guys, right here at the low of this two up candle, right? So right here, you're taking this, entering here, right? It comes down, comes back out with a short TTO. That's okay. You're looking at CCI and you're saying, you know what? CCI has crossed below negative 100. I like my odds here. I like my odds. And so because CCI is crossing back below negative 100 on the 18, it's crossed our trend line here where we said we wanted to go short. We know where our target is. This is our expectation. We have the broader market supporting us. Let the market do what it's going to do. It trades down, it hits our target, and then starts to trade back up, and then you're out of the market. So you have your 90-minute flip here, you're 2 down, you have price action, you're in the money here, price action kind of trends back up. You could take profit here, which, you know, you guys know the way I trade on these 18-minute flips. I may be taking profit here. It comes back down, quick scalp, comes back up, you're out of the market. Okay, so I did not trade after the 90-minute flip. And I'm actually working on a strategy where I only trade the first 90 minutes. And so there's gonna be days where I miss this, and it's only because I have so much going on that I can't sit here and watch the market all day. All right, so Tesla, I also traded. And so I'm gonna talk about this trade. So I made one mistake. Well, I actually did make a couple mistakes. I still made money, but I didn't make a couple mistakes. Some things that when I look at it, I say to myself, maybe you could have done something different, but I wasn't really paying attention. And I'm going to show you where I exited, where I probably shouldn't have, and got back in, and that probably limited my gain. But let's just start with, I'm looking at my broadening formations. This was a quick kind of, do I want to trade Tesla? And I drew this with not a lot of planning, because I actually wasn't going to trade yesterday. But I drew this broadening formation on the 18-minute. And I said to myself, if price trades above this range, maybe we can get a 2-up, because very similar to all of the other stocks, it traded 2-up and then came back in. And then I drew this guy off of that. So I'm drawing these off the 18-minute, guys, because I was looking for a quick win. And so I drew this off the 18-minute. I said, if it trades above this range, I'm going to try to go long. If it continues, maybe the market goes higher, takes a day. And so this was probably not the best move. So it did. At the open, it went outside, right? Then it went inside. So 3-2 went inside. I tried to take this inside bar right here. I didn't get, because, you know, at the time you can't see it here, but CCI was actually, because it came back in at this reversal, but CCI was above 100 on the 18-minute and above 100 on the 6-minute. So I entered here, but here was my problem. I didn't get a good print because it took me too long to execute this trade when I saw it. So I chased it. Bad move. I entered somewhere in this range here. Price traded up, next candle traded back down. So if you can imagine, you have to consider your spread on Tesla. I marketed in, marketed out, end up losing a little over $100. And I was like, ah! So not exactly thrilled, but what do? I'm seeing, I'm watching Qs, go back, QQQ. And I see this, I was like, oh no, I got to get in here. I got to get back in here, and I got to get in here short. So I do. At the 18-minute flip, since this went 2 up, came back in, now I am in here as soon as this guy turns red. So this was the open on the 18-minute flip. I waited till price went 2 down, because it went 2 up inside. And now I'm waiting for this 2 down candle. So as soon as this came up, came back down, I went short, right? So I was able to make some money. It hit this line level, came back up, came down, came back up, and I exited. And that was not a good move. But again, because I exit, so you can't see it here, right? But this was the 18-minute flip. It came inside. So this was actually green inside here. But had I been paying attention to my CCI, I would have just held this. But I saw this come in at the flip, and I just got out, right? Because remember, I lost money here. So I wanted to make sure I covered my loss. I didn't want to have a loss for the day. So this was not the best exit. I should have held on. But then I jumped right back in the market. And so that's why I said I left some money on the table, because I took this exit. I jumped back in here. Price traded down. When it came back above this level, I exited. And then I was just out of the market, because we're at the 90-minute flip, and that's when you saw the real move. And I saw this, but I'm so behind on everything else that I need to get done. I was like, you know what, we're going to have to come up with a strategy. So what I'm looking at now is trying to come up with the best way to maximize my first 90 minutes of the day. And so I can meet my financial targets. But here's what you saw. I did not, so just again, full disclosure, I did not trade this. But when you had the 90-minute flip here, this is at 11 o'clock, guys, you had this 3-2 up, 2 down. So where did I draw these other broadening formations? On the 90. So this was actually, I think on the 18, let me go back, hang on, where was this? No, this was, where did I draw this? Okay, all right, so yeah, this was on the 18. So when this started trading back down, which is why I exited, I was looking to take this guy out, this 2-up candle. So that's why I drew this line here. So that's this, the the low of this 2-up candle. So the idea here is price trades below this level. Now we're looking to take this out. So I drew this broadening formation off this 2-up candle here. Actually, I drew it on the 90, I think. Yeah, to this 2. So I drew that on the 90, right? So this was the low of that day. So we were looking to take out this low. And then if price continued lower, so this is actually just a horizontal line for that low. And then we were looking to take out this range here, and it's certainly possible it's going to happen today, right? But that's where I had drawn those lines. And had I been in the market, I would have been trading this down. Okay, so here's what I want to share though. Again, if you had missed the first 90 minutes, QQQ, you see these outside bars, you're looking at your broadening formation. You're looking at the broader market and you're seeing CCI trending down on the 90. Now we have to zoom out, guys. The first 90 minutes have passed, so you have to zoom out. You don't want to be looking here at this 90-minute flip. What is happening here? Does this look like this is going to continue? Where are your targets, right? So you're inside, I'm just going to draw this line. So you're inside here on this 90. I can't do it. I got snap and glue in here. So you're inside here in this 90, if you will, right? So you're looking to take this range out. And so you have to start thinking about that. Yeah, I'm looking to take this level out with my CCI giving me confirmation that this is moving lower on a longer time frame, right? And so that's how I do it. I just look at this. What is CCI? Ah, it crossed 0. For sure you're going to take this. So you see this is your 90-minute flip. You got a 3, 2, 2. Take that off that 2. We draw our triangle, our horizontal line here, right? So this 18-minute. So we're saying, that was a broad information. So we're saying, yeah, we take that. We're going to take the low of this. So this is where you're looking for your entry. So 90-minute flip says yes, short, not yes, long. You shouldn't be trading this higher. Remember, you have to determine which candles you're going to use as your M4. So if it's a 60 or 90, but it has to be at least a 60, right? It could be longer, but I think if you go out 2 hours, 3 hours, that's way too long. But 60, this is at 11 o'clock, so it's top of the hour, right? 30-minute. You don't want to go long here because your 90 is suggesting a shooter. CCI is saying short. I don't want to go long here. So patience, 3, 2, 2, back into time frame continuity, right? And you just hold this. You just hold this. You had a little TTO right here on the 6, little TTO trades down, and it hits this, it takes this level, takes the low of this range. Of course, I'm mad because I missed this, but I'm so far behind in my other work, I had to go do something else. But this is where I use CCI to help gauge momentum for the day. And this flipped also. This was trending up this is daily. This was trending up at the open. And you can see it started trending down, right? So that's how I use CCI, guys. Today, free for all. I mean, there's not a lot going on. Look at DoorDash, but when I look at, and let's just look at some of these stocks. Let's start with Qs, guys. Big 2 down candle. You know, it's Wednesday. Don't know what's going to happen. I can't tell you. I do know today starts a new 2-day candle. And so we can certainly see a potential outside, a 3-day outside week. So we'll have to wait and see if there is a doji So like I said earlier, see if this holds at about 282. You know, the SPY, does this hold, right? Does it trade 3-2 down and hold around 378? I don't know. We have to be flexible throughout the day. Tesla definitely has some room to go. And you can see again, could go 323. That would be crazy. But it's Tesla, not getting a lot of love. We'll talk about this 2-week pattern next week, July 5th. But you can see it traded up and inside next July 5th starts a new 2-week pattern. So there is certainly more volatility to happen. All right, so Tesla look like it's aiming at 685 level. Okay, be interesting to see that cross back over on a daily, cross over that zero line. Something else I've been watching, coin. These were the stocks I was watching for the week because they were 2 up on the 3-day. I had these on my list. I don't know if you remember me saying, hey, these are stocks I have on my list for the week. Didn't know what was going to happen, but you can see the volatility, big moves here. Yes, coin looks like it could trade lower. It's already 2 down on the 2-day, 2 down on the 3-day. So if you're interested in trading Coinbase, I'd look for a short there. But keeping in mind, you know, it's trading near the lows of its IPO. For $40.83 was the low. Yeah, so be careful with that. You know, get stuck in exhaustion. Netflix went outside. Certainly has some room to trade that lower. Square. Yeah, we'll see if it takes the 23rd at $60. The only way though, I think we'll still need to have the broader market support us. Airbnb outside, I don't really care to trade outside days. Nvidia, I had high hopes for Nvidia. It's just not going to happen for me. And this, I mean, think about it, guys. We're only in the first half of the year. We're in the first half of the year. And so when I look at this, Nvidia could certainly trade down to 134 in the next half, right? We'll see how this goes, but this is the low of April 21. So that second quarter in April, in 21. I don't know. It's looking pretty ugly. It's already taken out this on the monthly. So yeah, this is May. May low was 134.59. So this is, Q2. So it's already gone 2 down. So 159.03. Yeah, it's already taken that, guys. It's already taken this month, June 21. So you're inside this 3 bar. Yeah, ugly. Amazon, Amazon can go lower here today. Snow outside bar. Not a big fan of those outside days. Disney, same. Nike, same, but whoa, what a move Nike had yesterday. That can certainly go lower though. Today off some news. So if you're interested in Nike, looking at the month here, it certainly has potential to trade below 100. And Roku, 322. Short. All right, so let's chart. You guys want to chart Nike? I'll chart Nike. It's already down on the week. Let's chart Nike. Let's see if what kind of moves we get on Nike today, and then we'll wrap it up. So I don't typically like charting outside days, but we're going to chart Nike because of the news. They're having some supply chain issues that they think will continue. And let's see what we can do on today. Maybe get some move to the downside. This was a beaut. This was a beaut. I don't know if any of you guys caught that. That was a beaut. Had this big move up, but remember, we don't care what happens in this first 18 minutes. Let me look at this six. I did not trade this, but then you see this 6 minute, right, come down. Here's your flip. The broader market is trading lower. Yeah, I'm gonna take that trade. I'm gonna take that trade off of a 6 minute candle, and it's Nike, so not a lot of risk there. And then it trades below, takes the day red right in here. I just moved my stops. Trail this down. All right, so these are the days we like. Man, Jim, look at these islands. All right, so let's see if there's a way to, all right, we're gonna take this. We got an outside bar here. So we're going to take this to the next. So the high of yesterday's high to the next highest low in this range. And so would that be here? 113.44 or one? Oh, it's the same. All right, so we will take that 113.44. All right, so we'll just start there. This is too high, yeah. And then the low. So this will give us, this is the low to this outside bar here. Yeah, so we're going to take these ranges here. All right, so we're already outside this entire group of islands on yesterday's trade. So where do we go from here? Yikes. Guys, we can't do it on the 90. It's too far off. Let's see if we can do it on the daily, because you're going into some serious lows with Nike here. All right, so right now in pre-market, so it closed here inside this range. Pre-market is looking to take this low, which is 102.40. There was a gapper here, guys. So now what I am looking at is where in this range, how far down in this range is a possibility for Nike to trade. All right, so we're right here. We closed in this range here. So we already have our broadening formations drawn. Wow, we had to go way back. That's actually the upper length. That's up the upper broadening formation that crossed over. So I'm gonna take this. I'm gonna take this outside bar. You see where we're in this? We're at the low of this range here. So I'm gonna take this outside bar because it's a gapper, and I'm gonna say we need to see if price will trade below this trend line inside this range. So I'm going to take the high of this outside bar, and I'm going to go with the highest high, right? So higher than this, the next highest high, 101.91, 101.85, 102.02. So basically I'm taking this high down to this outside bar. And the reason for that is my view is if price trades below this broadening formation here, then you're inside this range, and we're looking to take out this outside bar here. Okay, so I'm going to do that, and then I'm going to take this outside bar to the next lowest bar in this range if we can find an angle that I like. So we're looking for, so the low here to the next lowest high. So this is 99.89, 100.03, what was that? 100. Yeah. All right, so it looks like this is going to be the next low, highest low, but I don't like the angle. So what I'm going to do, guys, is just draw us a horizontal line on this outside bar. All right, so that's where I'm looking for Nike to trade, and then we're going to trade this down. So if it trades, so let's go back. All right, so if it trades below this, the low of this range, really the low of yesterday's low. If it trades, take this low, then this is going to be my first target. So short of 102.48, first target is going to be 99, around 99.87. And then my next target is going to be 97. This is Nike though, guys. If you look at your average daily range, there's about $3 maybe, $3 to $4. Yeah, so $3 to $4 on Nike. Nike is your average daily range, right? Yesterday was significant. It went, yeah, $7 on a range. No, I'm sorry, $12 on a range. So round trip, it went from, the high was 114, the low is 102. So round trip, that was almost a $12, 11 some change. So that was a big range. So looking for this to short, but here I'm looking at about $3 to $4. Okay, so from 102 to about 97, so $4 to $5 on this range to the downside. Okay, I will not trade this if it goes higher. We do not want to be inside an outside bar. Okay. All right, so we're not trading inside here. So I'm not going to draw anything to the upside. I'm not going to draw any cross moves. I'm not trading inside this outside bar, period. So we've got to go two down. All right, unless this sucker is going to gap all the way up here, I'm not looking to trade this. So if we go 2 down, these are going to be my targets. All right. So I think we're going to end it here. So we'll just, yeah. We'll write it up. So we only got one direction here. We're going short. If price short below yesterday's low, which was 102.75, with CCI below -100 on the 18-minute. All right, that's our trade. So this needs to stay below -100 on the 18-minute chart. So what does that mean, guys? You are already trading to the downside. At the open, that doesn't mean jump right into this trade. You still need your signals. We still want our signals. So preferably, what I would prefer on this is you have this very small body inside bar here. Price trade up on the 90 and comes back down. I want to trade it short, so I'm not going to trade this long. You certainly could. Don't get me wrong. You could. I'm not. So because you have this inside bar here, you have a potential to go 2 down, 1, 2 up, and maybe capture a little move here. I would be paying attention to the broader market, but what I would prefer, given CCI, is to go 2 up, back down into full time frame continuity to the downside. And so that means I would be looking for maybe a 3-2, 2 to the downside, 2-1, 2 to the downside, 2-2, 2 to the downside. All right, cool. So I'm going to wrap it up here. With Proverbs 21:5, the plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. We saw this move yesterday, if you were trading it, but it's on every price action happens on all stocks. So up or down, price discovery, hitting broadening formations. No, keep in mind, we just drew this. So it's trading up and down in ranges all day. All we're doing is trading those ranges, looking for the best opportunities to profit. Your best opportunities is not to buy at the top of the range or to sell at the bottom of the range. So don't rush in to short this without a TTO. All right, I'm still looking for a TTO on the 6-minute for me to get the best opportunity, because it may only be $1. This is Nike, guys. It may only be $1. So the best opportunity is to trade off that inside bar or a 322, right? Because threes give you predefined broadening formation, because we know an outside bar isn't in and of itself a broadening formation, right? This is a range. And so we know, or a triangle. So we know that this could potentially create a broadening formation. So we're just waiting for those actionable signals. We know what direction we want to go. We want to go short, and we just wait for our signals. All right. So thanks everybody for joining. I appreciate you following me and subscribing to my YouTube channel. Take care, everybody. Have a great rest of your day.